Welcome to the 2024 Economic Depression and Preparation Channel. I'm your host, Tony. Thank you for joining me on this June 13th, 2024 edition, Thursday edition. Please be sure to subscribe to Preach to Me channel for the latest interpretation of financial news as it becomes available. Thank you very much for your support. Hope everyone had a great Thursday as we head toward the Friday. The rush toward the weekend is on, and we approach summer months as closer than ever before, and that signals more Federal Reserve meetings, more talks of rate cuts, but at the same time, we're seeing Main Street is hurting and cutting back, while Wall Street and others are looking forward to gobble up more of the corporate real estate landscape and more money as this economy continues to falter in the Western Hemisphere. So let's look at what's going on today, ladies and gentlemen. We have a lot going on. First of all, we have a lower market today. It closed kind of, topsy-turvy, but they had the Federal meeting today, Reserve meeting today, Federal Open Market Committee meeting, or FOMC meeting, and of course the rates were left unchanged, but they're still expecting a rate cut, and many people believe that this is going to trigger a market melt-up. You have to remember, when economies are crashing, like it did in Venezuela, Greece, Turkey, Zimbabwe, Germany, Weimar Germany, it's possible to have a market melt up because it's not so much the value of the dollar, but the purchasing power. It takes more dollars to buy less goods. And so once you see the VIX index increasing here significantly, you see that people are speculating here. Fox Business News is speculating that a Fed rate cut could trigger a market melt up. So in other words, the market can melt up while the economy is crashing. That is a very possible reality. Let me know what you think in the comments. Now they're saying that, remember before they were telling us in January they considered maybe 3 to 4 rate cuts this year. Now they're only considering 1 rate cut, and that's coming at the latter part of the year after the elections, as I've been telling you, like November, December, and that may not even happen. So the Fed holds interest rates steady this year, signals 1 rate cut this year, and so now we have a weird economy here, according to one report here by the Dispatch, uplifting after a somewhat uplifting inflation report. So we could end up having a period of stagflation, and then we go into hyperinflation, or the second scenario is that we could end up having just a straight up hyperinflation market going into a double recession, double dip recession, or some would say even a depression that's going to last for the next 10 years. So we have a couple of scenarios on the table here, or there could be a case where they print up more stimulus money after the elections, depending on whoever gets elected, and after the 2025, we have a rough 2025, and then 2026 they print up more stimulus money, and that hyperinflates us even more. So there's a lot of different scenarios on the table here, and that's not counting everything else that's going on in the economy. So we got the jobs report numbers, and these jobs report, ladies and gentlemen, they're saying that we're adding to over 200,000 jobs a month or so, and every month you notice that these numbers are getting revised downward. First they said it was 290,000. The next month you look at it again for the numbers in March, it's revised downward back to 240 or 230 or 220. So the Friday jobs report is going to be very interesting when it comes out at 8:30 a.m. Eastern time tomorrow, okay? Because we're going to see that we know that healthcare, government jobs, and retail and hospitality jobs have been holding up this economy so far, according to the official numbers, okay? So unemployment rates already rose above 4%, and I predicted you in a couple of videos before that unemployment was going to rise to 5% before the end of this year, and so far we're already on that wave. So I've been spot on with that prediction. One thing I wasn't right on this last few months, and I must confess, was I thought that there would be a deflationary period before the hyperinflation hit. The prices of things that we didn't need would go down, like on electronics or household appliances or stuff like that. But I was wrong on that. It hasn't gone down yet, our housing prices. So but we're going to see that in time. Like I said, this is such a big economy. People forget the United States economy is one of the largest in the world, if not the largest, at $19 trillion, $18 trillion that are circulating every year. And so it takes time for all these numbers to whittle through the system. And for the time they report it to you in the media, this stuff is the market's already 6 months to 12 months ahead of whatever they're reporting in the media. Okay, so just remember that. So employment is not the problem. The problem is that wage growth, it is not keeping up with inflation. Even though it said the wage growth rose in this article by CNN Business, it's not keeping up with inflation. It's not keeping up with food, gas, utilities, transportation costs, and the average American shopping spree is losing steam. People they're only buying the essentials, are buying prepper supplies. They're cutting back on all of this vacationary talk trip or on the luxury stuff that we like to call. And this is fact, because 12 restaurant chains are now closing locations in 2024. You guys have seen this. Even though we may eat out once or twice, I'm not knocking that. I do it too. But this constant buying breakfast, lunch, and dinner out at Starbucks or whatever these places may be. It's not happening. These stores are facing pressures, these restaurants, because they're paying people minimum wage in some states, what, $25 an hour, $20 an hour and above in some of these states for restaurant workers and waiters, and on top of tips. And companies can't longer afford that and provide quality. So places like Red Lobster, they're closing. Rubio's Coastal Grill, Cracker Barrel, they're closing some of their stores here, in South Carolina and some other places. Applebee's, of course, I didn't like them anyway. TGA Fridays, but a lot of people do, but they're closing down stores. Denny's, some of the staples, Boston Market, Mod Pizza, all these little stores, Outback Steakhouse. Some of these stores are owned by the same conglomerate, Yum Food, and some other places. Hardee's, they're closing. I was mad when they got rid of the cinnamon rolls at Hardee's. Those were probably the best things they had there, besides the jalapeno sandwich or whatever it was. Tijuana Flats. These are some good stores, good restaurants here that are closing down. There'll be more to follow, ladies and gentlemen. More of your favorite brunch places in downtown, all these areas, in Northeast and Southeast, and out in the Midwest. So be on the lookout for that. When hospitality and retail are struggling, then people are cutting back, and hotels and all of that are struggling to make ends meet. We're going to see that in 2025 as people conserve, as more and less cars. The more traffic on these interstates now than ever before. You would think with gas prices coming down just a little bit to $3.75 a gallon nationally, that there would be not that many cars on the road. But since the pandemic has sort of ended, there's a ton of traffic on all these interstates. There's a ton of semi trucks, freighters, all kind of cars. And, I miss those days during the pandemic where we had just a little bit of less traffic, when there was no traffic on the road, when they first had to work from home and all that stuff. I kind of miss that, where you can just cruise, in the morning or at night. There wasn't that much traffic. The air was cleaner, smog free in some of those cities. But now, those days are long gone. So be prepared for what's coming. Continue to prepare. Thank you for listening. Please be sure to subscribe. I look forward to seeing you in the next video, and talk to you very soon.